Dear friends, clients, and future clients, we hope you had a Merry Christmas and a safe New Year. And we thank any of you who hired us, referred a friend, or supported our company over the last 13 successful years in business. We have grown during that time from a one-man band into a 30-person company with over 200 yearly sales and over $76 million in sales volume for 2022 alone. As always, it's my intent to shed some light on the housing market leading into 2023 and help you not only appear smarter at the water cooler, but also plan your next moves in real estate. So the natural and obvious fact is, due to the interest rate hikes by the Fed, the real estate market has corrected from the all-time highs of Q1 and Q2 of 2022. We are now selling homes for lower prices than we were at the height of the market. So it seems that everyone you can hear prognosticating, from internet gurus to local pub gurus, from home builders to home cleaners, experts and wannabe experts, near and far, are predicting the housing crash of the century, sounding the alarms, calling for the housing market to plummet. And there are a lot of reasons why this is a popular and logical sentiment. Firstly, the market has already declined substantially. To us, it feels like 10+% lower on pricing since the height of the market. We know there were roughly 15% less total home sales year over year comparing 2021 to 2022. While the prices year over year are still reported to be up, anyone who experienced the spring market of 2022 knows that the current market is much different. Lower prices and much less competition for home buyers. In addition to the impending debt bubble in the consumer credit markets, an ongoing proxy war in the Ukraine, rising interest rates, and all the factors that are reported on in media, we can see why there is a lot of justifiably rampant pessimism about the economy. My goal is not to be contrarian or Pollyannish, but to simply review the data, interpret it, and ask questions of our verifiably intelligent listeners. Where are we going from here? And is it a good time to A, sell a house, B, buy a house, C, invest in real estate, or even D, become a real estate agent? First off, regarding where we are, the average recession lasts 10 to 18 months. The last recession of 2008 seemed like 18 years, but it was technically only 18 months. Many of us know that housing prices were starting to drop off a cliff before 2008, and in truth, the collateral damage of that recession took a long time to rebound from. So it's not to downplay the severity of that recession and the damage it did to the economy, just to show how quickly the damage passed through like a hurricane versus drawn out and long like an ice age. In and out, and severe damage is done. But by 2011, home prices were starting to rebound, and by 2016, going into 2017, the Great Society of Experts were beginning to predict another major housing crash, one that never occurred, by the way. The truth is, it is always good to cover our asses for the downside, but very hard to predict the future most of the time. One theme to remember is that the experts are almost always wrong. So in the meantime, we have to keep living our best life and making good choices. Furthermore, when we consider that according to the general definition, a recession is 2 consecutive quarters of negative gross domestic product, the U.S. entered a recession in the summer of 2022. So we are already about 6 months into the cycle of recession. In other words, we are between 1/3 and 2/3 of the way through the woods on a completed economic down cycle, even if it turns out to be a very bad one, historically speaking. This might surprise some people to think about it contextually, comparing data from previous recessions to this current recession. So how does this recession compare to the last one regarding housing foreclosures? Here are a few other interesting facts illustrating some of the difference between the last recession, the subprime housing bubble, and this recession, which we can call the post-COVID stimulus hangover. In 2008, 1.8% of households in the United States were in a foreclosure filing status. This may not sound like a staggering number, but keep reading, and it will shortly. For starters, using Rhode Island, our home state, as an example, only about 2% of the existing homes will be sold in any given year, roughly 12,000 out of 469,000 households. Secondly, currently the foreclosure filing rate in Rhode Island, 12th best in the country, fortunately, is 1 out of 8,336 homes. Using some rough calculations during the height of the foreclosure crisis, this number would have been roughly 150 out of 8,336. So there were around 150 times as many foreclosure notices in 2008 as there were in 2022. There were 58 completed foreclosures this year in the entire state of Rhode Island, compared with 500 completed foreclosures in May of 2008 as another parallel. Close to 100 times as many foreclosures in 1 month as a full calendar year for 2022. Both economic downturns are not yet the same or even completely similar. Don't get me wrong, there will be more foreclosures this year than last year. I am mainly steering clear of predictions, but that one is a lock. And many real estate investors are welcoming more foreclosures and short sales. It's also equally unfortunate for some people who bought with low down payments at the height of the market and had an immediate change of circumstances who are now underwater. But time has a way of fixing things, and if you hold on to your property, the value will come back and exceed the price you paid. And since you have a low interest rate working in your favor when you hold the home, you'll be all right with the procession of time. What about the housing inventory compared to the 2008 recession inventory levels? The housing inventory in Rhode Island remains staggeringly low. At the time of the publication for this newsletter, December 29th, 2022, we have been hovering around 890 single-family homes, 150 condos, and less than 150 multifamilies for sale in the entire state, which is approximately 2 months of supply. The all-time low for inventory of single-family homes was around 625, so we really have made very little progress with regards to increasing the supply of homes over the past 6 months. During the height of the housing collapse in 08-09, there were 10 to 12 plus months of inventory in Rhode Island and multiples of our current inventory level. Again, without a crystal ball, it's hard to know exactly what the future holds, but strikingly different market fundamentals. When you further contemplate that there is still not enough new construction being built to fill the demand for new housing, another question I would pose to everyone who is assured that housing prices are going to tumble 20 to 30% more before hitting rock bottom would be, how do we have a market collapse in a low supply market? I think some of the challenges with inventory levels is that many would-be sellers will start to feel the same crunches as the ones that bottlenecked the market over the last few years. Those being not enough options for places to move and uncertainty about the general economy. People tend to freeze when they are unsure what to do. A new variable will be many would-be sellers who don't want to sacrifice their record low interest rate, even if the home prices are lower and they can afford to do so, will sit out and see what happens with rates moving. Overall, there are always challenges to the markets, and the key is educating yourself and getting out in front of it. Because let's face it, the homes we live in and the equity, cash flow, tax deductions, and other benefits of home ownership or investing do matter to all of us. So where does that leave us, your trusted advisors with the Matt Patty team at Century 21 Shoreline Properties? We're back in a familiar place, being tasked with bringing more new listings to market to support the demand for housing as we turn the corner into 2023. If you are looking to sell your home, the timing is still great for most sellers. We'll fetch you a high price and good terms, and this is my specialty, how I earned the nickname, the Listing Machine. Rachel McNally, team partner, is the Listing Queen, and either of us are going to net you more money when you list with our team. We have streamlined our systems and continue to build our staff to create great experiences for clients that span before, during, and after the sale. We are investing into the local community through several measures like our quarterly client events and support for various charitable organizations. When you plug in with our company, we intend to net you the most money possible and create a lifetime client in you, and we appreciate all of your referrals. Please don't hesitate to reach out if you are interested in selling your home or buying a home this year. And I hope you enjoyed our first quarter 2023 market outlook. Happy New Year. Carpe diem.